everyone. Thanks for making the time to come in this morning. Just wait for the deck to come up here. Perfect. So going to be talking about Lumina Gold and the Cangrejos project in southwest Ecuador today. Last time I was here, it was the pre-PDAC conference. It was before we put out our PFS, and it was before we announced our stream with Wheaton Precious Metals. So it's been a busy year for Lumina Gold, and lots of progress at the project, which I'll walk you through today. So, what's changed since the last time I was here? Well, we have a reserve now. So we put out a PFS that outlined a 12 million ounce reserve. We're pretty happy with the results of this PFS. It converted over 100% of the mine plan from the 2020 PEA, bringing that 12 million ounces in. And as well, there's 1.4 billion pounds of copper there as a byproduct. So the asset's about 80% gold, 20% copper. A lot of the attributes in the PFS were pretty similar to the PEA. The production level still, almost 500,000 ounces of gold equivalent a year. Still, teetering on first quartile, just second quartile cost asset. We were able to also keep the CapEx flat from 2020 to 2023 with some additional phasing at the project that I'll walk you through. So we were pretty happy with that outcome. So today, sitting at about a $2.2 billion valuation at $1,650 gold and $375 copper. If you used a 20% up metal case, which would be kind of closer to spot these days, you'd be at about $3.5 billion. So it's a large-scale project. There's a lot of value at this. We're driving it towards feasibility study right now. And then kind of the last point, and I'll walk you through the details in a bit, but is this $300 million stream with Wheaton Precious Metals. So this is what's funding the company right now. We're using the $48 million that's coming in pre-construction to take us through feasibility study. And then, we have $252 million from Wheaton towards construction of the project. So just kind of cap structure and where we're sitting today. The cash we have on the balance sheet is from Wheaton that came in May. We got $12 million in May. We'll get another $10 million at the end of this month. Currently, we have no debt in the company. We just converted Ross Beatty's line of credit recently. So he went from just over 20% ownership to about 27.7% ownership in the company now. So he converted about $15 million Canadian, which was quite a show of I think support for the company, and he did that above market prices. So he converted that at 42 cents Canadian a share. So between Ross and management, what we call the Lumina Group, we're sitting at about 35% ownership of the company today. So Ecuador, I'd say this is the number one question I get whenever I travel or whenever I talk to people. It feels like for the 7 years I've worked with the group, every year people say, well, Ecuador seems risky. And then every year it just kind of continues to plod along and do better. Ecuador now mining is the third largest export in the country. You've had expansions at Fruta del Norte. China Rail and Tongling just announced doing a large expansion at the Mirador mine. So the two producing mines in Ecuador are getting better. There's a pipeline of projects here that are going to be coming online soon. I think El Domo will be the next project to get built with Adventus. And obviously our group, we have two projects in the pipeline. We have Cangrejos, which I'm talking about right now, and then our Condor project in our sister company, Luminex Resources, next to Fruta del Norte. So we've recently seen an election in the country. Noboa will come into power towards the end of November, early December. We thought either candidate in this election was going to be positive for mining. If you kind of look back at the last election, the anti-mining candidate who got 20% support in the country was down to 4% support in this election. So, I think it's very clear that mining is going to be a crucial part of the economy going forward and something the country is looking to build out over time. So just as a refresher, we're now in southwest Ecuador next to excellent infrastructure. We've got power, paved roads, water for the project. Importantly, we're 40 kilometers from the deep sea port that you'd ship the copper concentrate out of. That's a huge advantage for not only shipping the copper concentrate, but also constructing the mine, bringing in things to build the project. So where we sit today and how we position this, this is the 26th largest gold asset in the world. It is a massive project. It's extremely undervalued, I think, because of the CapEx hurdle on it and because of how people perceive Ecuador. But I think I'm happy to spend time with any of you after this. I could walk you through the reasons why, those risks I think are overblown in this context. The grade of the project, it's 0.71 grams per ton gold. We think of this more as a copper porphyry project, not necessarily by metal composition, but in an approach to mining. It's an efficiency and scale exercise. If you flip this into copper equivalent, it would be very similar to a lot of the copper mines that have been built recently, just hanging around 0.5% CUEQ. And that works in Ecuador because you've got cheap power costs, you've got cheap diesel costs. As I said, we're close to infrastructure, and the strip ratio on this asset is phenomenal. It's 1.3 to 1, so you're not moving a lot of waste to get at the ore. Stage, as I said, we just announced the PFS. We're moving towards a feasibility study, which we expect in Q1 2025. So the deposit, it's 2 open pits. They're right next to each other. You start at the larger deposit, the Cangrejos deposit here in the bottom right, and then you move to Gran Bestia later on. These 2 pits give you the 26-year mine life. These were planned at $1,100 gold and $2.20 copper. So it's a pretty conservative view. So on this long section here, you can see the red line is the mine plan on the 2 pits, and the blue line is the resource. So you're only taking about half the tonnage, but still getting 60 to 70% of the contained metal out. If you plan this at higher metal prices, you do pull a lot more tonnage and obviously have either a larger or a longer life project, but it is a massive deposit. Right now, we're drilling 18,000 meters. That'll wrap up right before Christmas. So the purpose of that drilling is really to drill the first 3 years of the mine plan to a higher confidence, so moving from probable to proven for the feasibility study. We're also doing geotech and metallurgy work that'll support the feasibility study. So all that's going to be ongoing through 2024 after the drilling wraps up. So just on products here and recoveries quickly, gold, 85% comes out, copper, 82% comes out. The vast majority goes to a copper concentrate. It's an extremely clean concentrate, no penalty elements in it. It's perfect for blending. So we've done extensive marketing studies on that concentrate, and we think it'll be attractive for off-takers going forward, which is obviously a viable form of project finance here. We also do produce a little bit of doré with gold and silver added at the project. So just on the PFS itself, we looked at phasing the capital. So we start out with about $1 billion of capital to start at 30,000 tons per day. And then we have an expansion in year 4 and then an expansion in year 7 to the ultimate 80,000 tons. This was kind of the best way for a junior intermediate company to look at it. The reality is if you were a major, you'd probably build it differently. You'd start at 50,000 tons, go up to 100,000 tons a day if capital wasn't an issue and you wanted the highest IRR, highest NPV. But this is kind of a practical way that a smaller company could tackle the project. As you can see, kind of once you do the expansion in year 4, you get up over almost 500,000 ounces of gold equivalent production a year. And cost-wise, on an all-in sustaining cost, you're sub $700 an ounce. So pretty attractive net of the copper byproducts. IRR of the project's sitting around 17% at $1,650, going up above 20% in the 20% up case closer to spot today. So the stream with Wheaton, why did we do this? We did this because we didn't like where our share price was trading. The cost of capital for this stream is fantastic. We ran it at the PFS prices is costing kind of 8% over the life of mine. So very attractive cost of capital. Brought in $48 million US pre-construction, $252 million during construction. We streamed 6.6% of the life of mine gold in the PFS plan, and we get paid roughly 20% of spot prices to do that. Wheaton's an amazing partner. They were there through diligence, through the whole PFS work. They had, comments and questions around the MET program and helped us kind of steer that as part of the PFS. So, they're a fantastic partner to have. I think it's a great third-party validation on the project that they were, willing to come in and put this much capital into a project that was, at a PFS stage. So this is just quickly the site plan. We made some improvements in the PFS. We've moved the plant. We've moved the tailings facility to slightly more efficient places. We think that most of those changes are really going to help with permitting, which is something we're acutely focused on now as we drive the project timeline forward. So, the timeline here, there's kind of 3 very important paths. There's the feasibility study, which we expect in Q1 2025. There's the investment protection agreement with the government. So We have an exploration investment protection agreement right now, which protects all our investments so far. We're working on terms for the exploitation agreement, which goes into the exploitation investment protection agreement. So we'd hope to have terms for that in kind of the middle of 24, and then you would sign your IPA in 25. And then lastly, getting everything going on the permitting. So we're hiring, a government-approved ESIA consultant right now to get the permitting on track and get that going for 2025. So ideally, all three of those things finish up in 2025, and somebody could put a shovel in the ground to build this project. And it's about a 2.5-year construction, and you'd be in production towards, the end of 28, probably 2029, to have this up and running. So just benchmarking, and I think some of you have probably seen this slide before, but to kind of drive it home, these are not common projects. There's not a lot of projects out there that can produce over 250,000 ounces a year. This is the 5th largest that's held by an independent. And more importantly, when you look at these check marks on this graph, a lot of these projects in this production scale and CapEx kind of sizing are getting built right now and developed. And a lot of them in Ontario, but around the world. These are the assets that companies are looking to build, because it's really hard when you build these underground gold mines that last 7, 8, 9 years, because you're always chasing reserves. Whereas with this, you've got 26 years of mine life driving steady cash flows for a long period of time. And that's the thing that can build a company, right? This is a key point, because I know next to Ecuador, the most common question I get is grade. So if you look at the right-hand chart, you can look at all the milling peers we have. We're the lowest in this set, just to show you I'm not cherry-picking the data. If you adjust it by strip ratio, we go to the second best in the set. So is it the full picture on economics? No, obviously there's processing costs, but this speaks to mining costs and why the asset works so well, because you're not moving a lot of material to get at that ore, and that's a huge factor in this type of operation. So, if I was an investor and I didn't own a share of this already, I think this is a pretty exciting time. If you step in now, you're 5% from gold at an all-time high. You've had us de-risking this since 2014. The market cap is roughly 20% lower than where we were in 2017 when we had 4 million ounces, and we stand here today having done 3 economic studies, put in a $300 million financing package, and we've had gold go up 60%, copper go up 30%. So it's a pretty attractive proposition, I think, for people who wanted to get into late stage development stories. Obviously, the M&A cycles felt a little broken lately, but it's a finite reserve business. At some point, that will have to change. There's only so many of these assets out there, and we think that Lumina Gold, for a lot of reasons, is going to be a mine that gets built and one of the more attractive operations once it's up and running. So maybe with that, I'll pause and see if anyone has any questions.